Hey everyone, and welcome back to the Florida Relocation Guide YouTube channel. My name is Adam Hancock. I'm your host once again, and today I want to talk about home pricing. Obviously a sensitive topic at the moment, but I want to look at what's going to happen the rest of this year, what's going to happen next year. So I've gathered the numbers, so I want to talk about the numbers year over year so you can draw some conclusions there. The most recent data. I want to talk about what I think exactly is going to happen with pricing, increase/decline. And then I want to finish the video with my overall net predictions, forecasts on multiple categories in real estate for next year. So I really hope you guys enjoyed today's video. Of course, if the video does bring you any value, please consider subscribing to the channel if you have not already done so. And if I can help you any real estate needs, buying, selling, and or investing with my brokerage, the Sunshine State Company, we would love to do so. Without further ado, let's hop in. Okay, first up, it obviously is probably not a surprise to anyone watching this video that Florida has been in vogue, especially the last couple of years, at an incredible pace. And it even seems like right now I would say the last 3 to 6 months especially, has gotten really weird. But it even seems with the 8% interest rates and a lot of the fervor and energy that came with the post-COVID era in recent history, even with diminished affordability, it seems to have muted the demand, but not in a crazy, crazy way. So rather than continue guessing, I pulled the numbers. I want to look at the numbers and we can see for ourselves. So this is about a month ago and directly from the Florida Realtors database. So we're talking closed sales first. Sales that actually closed, did not go pending. 23,000 sales, which was about 8% down year over year in the same month, right? So less sales overall contracting, which probably isn't a surprise either. Average sales price of those sales was just under $600,000, which was up 4%. So you have total sales down and price up, it's all the scarcity stuff that's been happening. Median sales price versus average, obviously probably a better indicator. $415K, which is up about 2%. We've seen that really in a lot of our local markets here because everybody thinks median price is like $800,000 everywhere, which isn't necessarily the case. But median being almost $500K is actually quite high for a lot of the coastal markets, especially. Median days on market, this one's interesting, is at 69 days. That's up 21%. So it's interesting that, we've been seeing a lot of stuff fly off the shelves immediately if it's hot, like the same kind of market, a lot of the demand. But now with the affordability where it's at, if stuff's not an absolutely slam dunk, then people will wait completely. So that's interesting. So days on market up 21%, 29,000 new listings hitting the market down in that month, down 11%. And then we finish with 3 months of inventory up 25%. We were less than 1 day, I think, for maybe more than a year straight in like Sarasota's market, a lot of Tampa, a lot of Naples, and 15% of the total homes that sold of the 23,000 were above list price. So I don't know where you fall on that kind of thing. That isn't crazy surprising to me. Less closed sales, less stuff on the market, and still a lot of people migrating to the market, albeit not as many as were before, is going to create all the things with a lack of abundance and scarcity that is going to naturally drive up price. Okay, so a lot of the craziness in this Florida market exists from the category of net migration. It's people moving from out of town, out of state, out of country, and choosing Florida as their home base. And we've always had that thing happening, right? Florida has always been that retirement kind of base, especially in the Southwest Florida area where we exist mostly, but not near at the scale that it's happened in 2022 and 2021. For instance, Florida saw the highest domestic migration by any state in 2022 and added 318,000 new residents, which is kind of wild, but it gets wilder. The first time since 1957 that Florida's population grew faster than all the rest of the 49 states by almost 2 full percentage points. And then you look at, which I did a video on this, try to pop it up here a while back, but then you look at like all the destinations. If you take the top 10 destinations people in America are choosing to go into, doesn't matter where they're coming from, but inbound net migration. Florida had 5 of the 10 destinations just in the state of Florida when you take all of America. And crazier than that is they are all very close to each other. So 318,000 new residents in 22, and the 5 metros that are the main targets are within like a 2-hour little strip from each other mostly. So you have Orlando, Sarasota, Tampa, Cape Coral, Miami. And if you take downtown Sarasota, where my main brokerage office is, and we have offices in Tampa and Vero Beach and Naples area, but downtown Sarasota is 60 miles one way to Tampa, which is on this list, is 60 miles the other way to Cape Coral, which is on this list, which is just above Naples. Miami is 3 hours one way and Orlando's 2. So what you did is you didn't just have 318,000 people move, but you had the majority of them pack in the same part of the state of Florida, which that's why if you were existing in that area, that's why you felt the gravity of the impact of the pricing and the lack of inventory and all of that, because it wasn't necessarily statewide at the same level it was in Southwest Florida. Okay, so first up, I think home price levels will mostly remain stable, possibly even a slight increase in the major markets that were already popular. And that in one part is, I had mentioned that net migration was a little slower and affordability is definitely not what it once was. I mean, I think affordability levels are the lowest they've been since 1982 technically right now. However, the name of the game here isn't affordability, it's perspective affordability, not linear. Because it doesn't matter if Sarasota's home price median goes to 450, 500, if Los Angeles is still 880. Because the perspective of that is what made all the stuff happen originally. It's not a warm and fuzzy thing for locals to hear, but if Seattle median price is $1 million and Austin, Texas is $600K, but it was $300K, it's still perspective affordability. And I think it doesn't need to be 318,000 people a year moving to have a large impact. We're still going to have ripples of people being alerted to the fact of what lifestyle they could have in Florida from the hysteria of the COVID era. I think that's going to ripple for years to come. Okay, the second area if we look at is inventory. If we look at the way inventory could possibly affect affordability and home pricing in general, I think there's two interesting things that pop out in that conversation. One of those being new construction. I think as more new construction comes online, if you're in a market that has an abundance of new construction, that could help the overall pricing when it comes to total home variety available in a market. Because at markets like this, where builders are competing against each other, the higher rates, people are nervous, they also have to bear maybe a long build time, then builders are heavily incentivizing those folks. Overall principle, overall kind of B2B more transactions of a business that has a higher margin in order to offer things, could you have a net lower home price finish to it. The second thing is regular home sellers. So a lot of people are aware that inventory has been low because of the lock-in theory. People that bought at a time where they had a lower interest rate, how could they sell? Because they're going to break that chain. Even with loads of equity, they still got to buy somewhere else. That is all true. I think there'll be some level of confidence that improves that people will normally sell. But I think what a lot of it could come from is that these folks will sell those homes because they maybe aren't necessarily enjoying the net migration to their local markets as much as the people migrating. So they're going to sell because they want to leave. They want to go to out of state and they want to go to maybe more moderate, less crazy markets like Greenville, South Carolina, Asheville, North Carolina, Savannah, Georgia. You could go on, right, etc. So they will move to markets that are generally more affordable, which would allow them to take equity, exit here, and still win overall in net money-wise. Okay, and the third thing I wanted to hit on when it comes to pricing overall is the idea of the boom markets. The markets that when everybody migrated and they pushed their way into like 3 or 4 major metros, that these metros sold 3-4 years worth of houses in a 12-month span, which just throws a lot of stuff out of whack. Prices got crazy. People are making way too much money on appreciation. People are pushing their way into cities that only have a certain amount of inventory, that aren't that educated on the market yet, which are then rippling to the surrounding suburbs, making them way more popular than they probably should ever be. And that's going to correct. In any market that jumps large percentage points at one time, 5, 10, 15, 20%, then even going down 5 or 10% to above normal is going to look like a big decline. So that's definitely going to happen, I think. 2, I think a lot of people probably chose wrong. They were trying to get in the state. They didn't have a lot of education. They maybe had a friend, got bad advice from a real estate agent potentially, and they chose the wrong location. They went to Naples, and now they want to go to Sarasota. They went to Miami, now they want to go to Tampa. A lot of New Yorkers and Canadians went to the east coast of Florida, and now they're like, I wish I would have chose the southwest coast. And so they're going to make simple moves of taking that appreciation they probably have from forcing their way into an area because they forced their way in 2020, And now they took a breath, they're in the state, got their head around it. Like when you move into any new neighborhood, right? It feels very different after 3 months than it did when you drove through. And they're going to correct that. And that's going to create inventory. That's going to create movement. And it's a very different market now to sell than it was before, obviously. So there could potentially be a home buyer now that benefits from these people wanting to move for quality of life reasons more than for just straight money reasons because they have enough equity to go around. Okay, now let me finish with kind of a speed round of my predictions for 2024 when it comes to the Florida real estate market. Number one, should you buy a house? Is it a good idea? Is it a bad idea? I stand on it could be a good move depending on who you are. Obviously, I'm not considering a lot of factors. I don't know about you individually, but I think it could be a good move if you do two things. One of those is the assumption that long-term value of Florida probably is not going away unless it floats out into the ocean. You know, people, for the most part, people are migrating. When they migrate, they go to just a handful of places, and Florida usually wins that game. You know, we're competing with Texas, but it's incredibly different. A lot of the coastal part of Florida is not the same as Houston. It's not the same as Galveston. It's very different, right? So we are competing with it, but you're talking a binary conversation. And then you have the Georgias and the North Carolinas of the world, but it's so different. So people are still going to move. So over the 7, 10, 15-year term, you should overall win if you don't get weird with it. And that's my second point. Florida's simple, old school real estate rules, and this would be the time to lean into it the most. The closer you are to the coast, typically a good idea. If you can combine the downtowns with the coast and mixed amenities, it beats that. If you can be central to the state, so you have access to the surrounding kind of day trip ability where you don't feel like you sacrifice the rest of the state when it comes to your homestead, that's a good idea. If you move to the fringes of a suburb or east of town or something like that, you should get a benefit. If you're going to go further from what everybody deems important, you should save money, you should get a bigger house, you should have a newer house, something like that. If you can stay in that lane, then I do think it'd be hard to lose over a plus 5-year term when it comes to owning a house in Florida in general. Okay, then let's go to the other side, home sellers. What is the best thing to look at there when it comes to predictions? So we're seeing this one pretty clearly. You know, I think that we're going to be in a seller's market probably for a while. We'd have to increase days, not just 3 days. We'd have to get significantly higher to be in a balanced market or shift to a buyer's market. But there's a lot of things that I think are going to prevent that. And it's not going to happen quick if it ever happens in my real estate lifetime. But we are not seeing things fly off the shelves. It is very, very different. Like, I can't harp on that enough than it was. People are still buying good deals immediately, and all the people that are waiting are getting a lot more educated. So there's more people sitting than ever. But so when something comes on that they know is a good value, they crush it just like they did 2 years ago. But we need to take we gotta like get way more serious about it. Basically, you gotta the old school home presentation of how you present a new listing. We have to get way more serious about that. People got kind of the benefit of being a little lazy with it because it was selling regardless. Also, I think a big thing is we have to be aware of hurdles. You know, the fact of the matter is that right or wrong, new buyers are going to look and see how much money they think you're going to make based on when you bought the house 2 years ago. That's going to come up. We need to be aware of a lot more information. You know, you need an agent that's aware of not only that neighborhood, but what's going on in the new construction market, the surrounding cities when it comes to the comparable markets in Florida. You just have to be aware of a lot more information because we're seeing people that are very hopeful and agents that maybe were a little bit more arrogant, still feeling what they felt like in 2020, list these homes and they just sit. You saw the average days at 69 days. And we all know how that feels where it's a lot more of a guess than it was in the past. So that would be my 2 cents there. Okay, and then there's mortgage rates. What's going to happen here? I think it's a little bit in the is what it is situation. I don't know if it's going to sit at 8 or go a lot higher than 8 for a long period of time. But even if it goes to like a 7 or a 6, you know, and then eventually maybe we're settling at what is normal as maybe a 4.5 or 5. Like I think I bought my first house in 2012 and it was 4.5, something like that. The 3% is probably not coming back. But with all of that, I think it is not going to be material windfall of saying like, if I just wait 6 months, I would have gotten that 4%. I don't think it's going to happen that quickly. So if that's the case, then you could do a couple things, right? You could say, if you do think it's going to drop from, let's say 6 to 8, which isn't immaterial of a price range, then, or a price impact, then you could just go for like maybe a pay down, like a 2-year pay down, a temporary buy down to the rate. That could be a solution where if you're right, you win. If you're wrong, you're in the same place and you benefited for 2 years. You could also lean into the fact that you maybe get a lot better new construction incentives right now because they know that everybody's dealing with this. You get negotiation when it comes to buying a house from a seller because they know maybe you can get your closing costs paid for again or something like that. Maybe you can get in an area that you wouldn't have been able to get into because the demand was so wild. If it drops to 4%, can you compete in the market that you're trying to compete in if you're only putting down 5 or 10% on the house? So, I think the net conclusion of this whole conversation when it comes to mortgage rates is if it isn't going to materially jump crazy up or drop crazy down, then if you're stuck with that information, then you can really decide on what you want to do. If it's going to remain the same, then you can pick where you want to live, what you want to do, without the fear that if you go too quick, you're going to miss out on a possible drop or vice versa. Okay, and then fourth, when it comes to forecasts, let's talk sales volume. I think, so what we're seeing basically is, obviously we saw a grand slowdown. And the problem with a lot of year-over-year comparisons is I've seen a lot of reports, including some stuff I was mentioning in here, is that they're comparing, right now to some of the craziest years in history, right? You have to go back, if you want a true marker, because I think we're getting into a lot more normal. Now, normal with 8% interest rates, but you probably have to go back significantly, 2019, 18, 17, because you had a weird market that, in 2007, 8, 9, that basically probably didn't normalize until 2010 to 12. And then you had a gap time in between, and then we hit COVID, right? So you got to find the time period where if you didn't have some disaster in the world, what was normal? And I think that's where we're in. And so it's very uncomfortable because it was so crazy for so long that people feel like this thing fell off a cliff. But what I think we did, we just hit kind of normal seasonality. And we're now going to have reasons that people move there to these markets already. So for instance, people early retiring, the work from home thing that maybe doesn't seem as permanent as it was going to before, and all these reasons that people did things 5 to 10 years earlier than they were going to. They're working out the rest of their pre-retirement from Florida on their back patio versus, California or whatever it may be. They might not be able to do that any longer. So that's going to drop a lot of the migration. But we're going to have logistical moves. We're going to have regular retirement moves because those people didn't get younger during the period. So if they can still afford it, they're going to just do it normal. So I think that's what we're seeing 100%. We saw a real weirdness, like I said, the last 6 months. But, something happened, in the last 2 weeks, I would say, where, with us, with both of my brokerages, with title companies we work at, the same story. Picked back up. It's getting back there. But that's what our market in Southwest Florida was. We are hitting just the month that happens in the year. And as people get more confidence that interest rates will, even if they say they're going to stay at 8% forever, then now people are going to have to do what they would have done, right? Because they're not waiting for something to happen. And so that's what I'm seeing when it comes to sales. I think it's going to still be slow, but slower is another conversation of perspective. What is it slower than? I think it's normal. And then as I digress here, the final one, if we just have a catch-all bucket, when it comes to appreciation, I think that if you buy, like I said, you buy for the right reasons in the right areas, and you can stay long enough, I think it's pretty safe bet to say a 2, 3, 4, 5% of appreciation is going to be pretty much guaranteed for the most part over a long enough period of time. I think the days of the windfalls is probably going to get a lot more watered down than it ever has, but normal appreciation because of all the Florida reasons is going to happen. When it comes to competition, there's still going to be a lot more home buyers than inventory available. So there is going to be a surplus when it comes to that. There is going to be competition. Cash is still going to win out, especially at 8% interest rates. But the thing is, you might not have 200 people waiting outside of that open house for that house you were looking at, but there still might be 50. So it's going to be competitive, but you should have a lot more of a shot than you did in the past. And moving quick, if you think it's a good idea, is still a good idea. And then just overall balance, I mentioned that inventory. Now that's a broad brush. Florida's total inventory. It's not each market, but at that 3-month mark, and if you can get to a 4 or potentially even a 5, which I'm not sure is going to be possible in the hot markets, then I think we're going to have a lot more balance. I don't know if we're going to get a true even balance of buyer to seller for a long period of time, like I mentioned, But any more of that we can have is always going to help the buyer. More variety is going to help the buyer. More new construction is going to help the buyer because there's options and there's seller to seller competition. So that's what I would say about those three. All right, my friends, that is a wrap for today's video about my 2024 predictions when it comes to home pricing. I hope you enjoyed it. Again, my name is Adam Hancock, and this is the Florida Relocation Guide, your smartest way to buy, sell, and/or invest in the entire state of Florida. If you liked the video, please subscribe to the channel. And also, if you are looking to do anything in the real estate market, you want to have more conversations like these, you want to talk to anyone on the team, then please consider using the Sunshine State Company. We would love to assist in any way we can, whether it's now or 10 years from now. Thank you guys most importantly for watching today's video, and we will see you on the next one.